DC at Discovery Zone, where I can cut loose and be on my own.
Hi there, sorry for ruining the fun. I'm Jason and welcome to my YouTube channel, Company Insight. In this video, I'm going to talk about the story behind the rise and fall and what happened to the Discovery Zone. Who remembers Discovery Zone? DZ Discovery Zone. I was obsessed with that place as a kid, running around getting lost through the tube tunnels, the ball pits, roller slides, and zip lines. It was unbelievable fun and good memories. Did you grow up in the United States during the 1990s? If you did, there's a greater than 60% chance that you attended a party at an indoor entertainment facility, the major names being Chuck E. Cheese, Funtime America, and the Discovery Zone. Chuck E. is still in worldwide existence with its electronic-based carnival aesthetic. Funtime America has been reduced to only a handful of locations nationwide. But the saddest story is with the Discovery Zone, an indoor party venue that became the crafters of 45 McDonald Play Centers in 1994 and ultimately running over 300 centers in that same year. With affiliations with other 90s juggernauts like Blockbuster, McDonald's, and entertainment industry giant Viacom, the publicly traded Discovery Zone intended to be the leader in the indoor fitness party venue in the world. But what happened? What drove such a well-positioned business into the ground, seemingly overnight? Today we'll dig deeper to uncover what happened to this remarkable brand. Whether you're a boomer, Gen X, millennial, or younger, you'll be a DZ business expert by the end of this video and relive part of the nostalgia along the way. But first, I just need a quick favor from you. If you wouldn't mind just hitting that like button for the YouTube algorithm, it would really help out a ton. The more engagement a video like this gets, the more likely the YouTube algorithm is to push it out for more people to enjoy. And as this is a brand new channel, it helps me out a ton and it's free to do. Thanks for doing that. And now, let us continue on with the rise and fall of the Discovery Zone video. What is DZ Discovery Zone? In 1989, Discovery Zone was founded by Jim Jorgensen, Ronald Match, and Dr. David Schoenstatt in Kansas City, Missouri, opening 15 locations in their first 18 months of existence with a business model based around active entertainment, featuring expansive, multi-level, elaborate indoor mazes. Cost for kids was about $6 for the first hour with an additional $2 for each additional hour. Between the kid-friendly zip lines leading into large ball pits and the extraordinary potential for these landscapes, the company could confidently boast the motto, "Never the same fun twice." That is merely from the physical activity perspective. DZ Discovery Zone also hosted video game arcades, a must for any 1990s kid party venue. Let's look at the key metrics for the first few years. As you can tell, things were on a roll. From 22 locations in 1992, they grew to 61 locations in 1993. Yearly revenue had also tripled from $20 million in 1992 to $61 million in 1993. In June 1993, the company went public on the NASDAQ stock exchange at $22 a share and immediately closed over 60% higher at $35 on the first day of trading. With the IPO, DZ was able to raise over $50 million to fund their growth. At their peak, DZ Discovery Zone had 347 locations between the United States, Canada, and Puerto Rico in 1994, and revenues hit $181 million that year. Wow, what a huge accomplishment for such a young company. You could say this was like the WeWork of the 1990s minus the IPO and Adam Neumann. Huge advantage, big, powerful shareholders. Let's look at the strengths of Discovery Zone. I'll skip past the awesome and fun experience that everyone knows about DZ Discovery Zone and focus on the less spoken of advantage, which was their powerful sponsors. First of all, they had huge brand name sponsors and were able to raise large amounts of investor capital. There were other indoor playgrounds, but none were as large as DZ Discovery Zone because Discovery Zone was the only one with access to capital. Sponsor number 1, Blockbuster Video and Viacom. Blockbuster Video and its then parent company media giant Viacom infused over $10 million into the burgeoning DZ Discovery Zone in April 1993. With Blockbuster's partnership, they gained a 20% stake in the company with the soon realized option to increase their investment to a majority holding beyond 50%. With plans to design and launch 10 locations in Great Britain and the rights for Blockbuster to design 50 Discovery Zone locations, Blockbuster saw the marketing potential of this merger. The notion of creating a party venue with the marketability of bringing that party home with a movie or video game rental from Blockbuster was a good one at the time. A one-stop shop of culturally cutting-edge modern 1990s entertainment was worth the gamble. As we look back from the clear view of hindsight, the marketing value of the merger doesn't seem to make that much sense, which makes it difficult to question the investment of the Fortune 500 company Blockbuster Video. Blockbuster's then parent company Viacom looked to boost DZ with its strong cultural ties in April 1994 when Blockbuster claimed 50.1% of company holdings. With Viacom's media empire, they planned to brand DZ with Nickelodeon, Paramount Pictures, and Showtime icons, but these plans were never fully realized. After signing a promotional contract with Saban Entertainment for the rights to use characters from the 1995 property Mighty Morphin Power Rangers, no further major alliances were made with DZ. You guys remember Power Rangers. Now, back to Discovery Zone. Viacom's video distribution service was not the only company to jump onto the sinking ship of the Discovery Zone. Let us dig into who else was, reasonably, duped into one of the most surprising corporate failures of the 1990s. Sponsor number 2, McDonald's. The world's largest restaurant chain, McDonald's, had first introduced the Play Place concept to stores in 1987. The original McDonald's Play Places were created and organized by a company called Leaps and Bounds, known for their signature indoor play areas defined by 2 horizontal tubes joined by a sphere, which is a staple in all play places to this day. Play places were seen as a branding opportunity for McDonald's and to add to kids' experiences with Happy Meals. McDonald's work with DZ Discovery Zone started in 1995 when it sold its 45 Leaps and Bounds stores to DZ Discovery Zone for $111 million in cash and stock, thus becoming a shareholder in Discovery Zone. Again, this appeared to be a savvy move for both parties involved. According to the then Director of Corporate Communications for McDonald's, Charles Eadling, "We view it as a merger of the 2 pioneers of the child entertainment industry. We intend to be involved for the long term." Speculation aside, the logic of these 2 mergers with Blockbuster and McDonald's seem perfect fits for the ever-growing Discovery Zone. None of these financial backers can be held to fault for pumping money into the Discovery Zone. They all had solid logic that a child's party destination would be an effective platform for marketing other products, whether that be VHS tapes from Blockbuster or burgers and fries from McDonald's. So why did DZ Discovery Zone fail? The first signs of things starting to break could be shown by the number of franchise locations operating. In general, for a growing company, the franchise route is usually the fastest way to growth, as other people are investing in the fit-out and furniture to open Discovery Zone branded locations. Each DZ Discovery Zone is said to cost about $700,000 US, which is approximately $1.2 million in today's dollar after taking into account inflation. Money printer go brrrr. Franchise owners paying their own fit-out and paying the company monthly fixed fees and a revenue percentage share is the best deal, as it's a very asset-light model that allows for the company to expand quickly. Let's look at Discovery Zone. Franchises accounted for 67% of the properties in 1992 and 34% in 1993. However, by 1994, this was already down to single digits. After the initial excitement in 1992 and 93, franchise owners realized they were not making money and were leaving in droves. Reason number 1, only weekend business. The first problem DZ Discovery Zone playgrounds faced was obvious from the start. The centers were extremely crowded on weekends, but literally vacant during the weekdays. As said by equity analyst Michael Moe, the trick there is how to get kids and people in there during the week when they are supposedly doing homework. The situation now is the viability of the concept is in doubt. Reason number 2, it got boring after a while. In addition, DZ Discovery Zone failed to keep its concept fresh with new attractions like video games or rides. As a result, many parents and children did not make return visits. Sean McGowan, an analyst who covers toys at Girard, Clower, and Madison, said, "I call these things hamster habitats. If all you've got is a hamster habitat, you're probably not going to go back." The arcade landscape of the early 1990s was an ever-changing field. Presumably a nightmare for owners of these establishments, as graphic capacity and costs were on a steady incline through the decade. It was imperative to keep up with the desires of American youth, especially those deciding to host a party at the Discovery Zone. In 1996, the Nintendo 64 hit the market with 3D graphics, unrivaled by any video game previous. This cultural tide would prove critical for any youth entertainment business. As mentioned before, in creating such expensive locations with beautifully elaborate jungle gym structures, the Discovery Zone was not fiscally prepared to stay up to date with the state-of-the-art video games. The question is, how many times can someone go back to DZ Discovery Zone if no changes and new equipment are being built at the location? Reason number 3, declining quality and service. Third, with the huge expansion, quality was failing as well. Craig Bibb, an equity analyst, summarized the problems. The company expanded rapidly with the goal of getting there first to keep the competition from appearing. They made a trade-off in rolling out that quickly, which is they really didn't build the infrastructure behind the organization to support all the units they were building. The result was a decline in service at the playgrounds, which showed up in inattentive employees and low-quality food service. That made DZ Discovery Zone unpleasant for some adults. This was also verified by a franchise owner who owned 2 locations. The owner explained that operating her 2 Discovery Zone playgrounds had been more expensive than she anticipated because of the company's problems. For example, rather than buying her food through the corporate office, which would give her the buying power of a large corporation, she bought Domino's Pizza and Baskin-Robbins ice cream cakes for her own stores to offer better products to her customers. Back at corporate, the Discovery Zone spokesperson agreed and acknowledged that the chain had problems with management and food service in some stores. This was a small item that led to the downfall. Reason number 4, rocket-level expansion too fast lead to huge losses. But the biggest issues were the business fundamentals. Finally, the DZ Discovery Zone spokesperson also acknowledged that the rapid expansion had cost Discovery Zone in other ways. Many of its hastily signed leases were too expensive and the company had a burdensome debt load. Let us look at how the company was doing revenue and earnings-wise. By 1994, problems were happening. Net income margins in 1993 were positive 5% with 168 locations. However, Discovery Zone kept expanding and expanding. But as they expanded, they started going into more city locations and rentals, which were one of their highest expenses, which kept on going up as the easy and cheaper outskirt locations were all taken and they wanted to keep growing rapidly. Industry consultant William Harrelson described the problem further. Discovery Zone must generate repeat business from a very narrow audience. To find enough children, centers would need to locate in high population areas where rents tend to be high. Your rent's comparable to what a retailer would pay, but your revenues are not. They may be doing everything exactly right and still have a problem concept. In 1994, even though they were opening more locations, net income margins fell to negative 14%, with the company losing $25 million that year. Fast forward 1 year, 1995 was a complete disaster. Revenues had increased to $259 million, but losses had ballooned to negative $449 million. That's nearly $500 million. And that was the year the company started shutting locations down. The modest competition, primarily Chuck E. Cheese, based their locations on the state-of-the-art arcade rather than the active playground space. This allowed for smaller spaces and more affordable infrastructure. Even with Discovery Zone offering a better product, they went for the monopoly status in the industry, hoping to dominate based on nationwide ease of access and quality of product. Alas, Discovery Zone flew too close to the sun and landed themselves in over $360 million in debt in 1996. In March 1996, DZ Discovery Zone filed for bankruptcy. The losses had grown too large that it was becoming too difficult for anyone to stem. The number of locations fell from 321 in 1995 to 212 in 1996, and Viacom completely wrote off 100% of its Discovery Zone investment that year. Company Insight Discovery Zone lessons to be learned. Keep tabs on your contemporary market. Know the trends and observe them closely. For Discovery Zone, these trends need to follow the 1990s childhood dream. They started just where they needed to be: pizza, jungle gym, arcade. In other words, youth, food, culture. Youth, active imagination, and general video game trends. Conservative business sense is equally important to a great idea. How many times can I state it? The original idea for DZ Discovery Zone was brilliant, pinpoint correct. Their business model was flawless, with evidence by their place as a widely held nostalgic memory for people growing up in the 1990s middle-class America. They painted the portrait of the ideal kids' party from that era. Fiscally, they were foolish, diving too deep too quickly into the nationwide market. DZ did not leave themselves the wiggle room to update with the times, and though they made a valiant attempt to refresh their brand with massive corporate partnerships, they could not meet the financial overhead necessary to maintain their 300+ locations. Conclusion. To wrap up the sad failure of DZ Discovery Zone, let's analyze their prospects for the future at the time, as their corporate leaders struggled to think their way out of bankruptcy. In a 1995 article by the Los Angeles Times, the Discovery Zone was in the developmental stages of a new project, now geared towards an older audience. These complexes are beginning to appear around the country, led by a chain called Dave & Buster's. Discovery Zone is working on such a project, dubbed Metro Zones, using elements borrowed from smaller family entertainment centers in Chicago's suburbs that Discovery Zone acquired in 1993 and 1994. I chose this example to punctuate their corporate failures because it shows a repeated bashing on the same strategy that led them to failure, throwing massive amounts of money at new ideas rather than keeping their scale down and maintaining quality in existing locations. It would appear that with a completely new business, alongside the almost 300 DZ Discovery Zone locations, that there would not be enough money to do the necessary updates to keep in cultural vogue. DZ Discovery Zone is cemented in the millennial middle-class America's nostalgic views of the 1990s because of its failures. The Discovery Zone committed so intently to the early 1990s cultural dogma that as culture shifted, they could not keep up. One thing you can say, for those growing up in the 1990s, DZ's Discovery Zone is a profound cultural time capsule. If you're around the United States, a shout out. Be sure to check out the City Museum of St. Louis. It's literally one of the most fun places I've been in my life and is like the modern-day Discovery Zone for children and adults alike. So with that said, thank you so much for watching my video. There was a significant amount of research and production that went into making this video possible, so if you wouldn't mind giving the video a like and leaving a comment in the YouTube section below, it would really help out a lot. Did you go to Discovery Zone as a kid? What are your memories there like? Be sure to check out some of my other videos like The Rise and Fall of New York and The Rise and Fall of Orbit's Drink from the 1990s. Thank you again for watching, and stay tuned for another episode of Company Insight next week.